Oyez, oyez, oyez. Anyone having business before the King's Justice of the Superior Court of Justice, attend now and you shall be heard. The Honorable Madam Justice Hennessy presiding. Long live the King. You may be seated. Unless done in accordance with the Superior Court of Justice protocol on the use of electronic devices, these proceedings are not to be recorded. Thank you. Mr. Hutchings, you remain under oath from yesterday.
Good morning, all.
Morning.
Mr. Schachter.
Firstly, just organizational by way of how the day might look, subject to the court's direction. And I was thinking that we could go from 9 till about 10:30-ish. Then take a break and then continue from about 10:45 till noon. Take a 1.5 hour lunch. And then from 1:30 to 2:45, then a break. Then just go from 3 till 4 because we have a hard stop at 4
Oh, do we?
Yeah.
For a plane?
for plane, and I understand some other activities that require a stop at 4.
Okay.
If that's
And I
well,
presume you've worked this through with your colleagues, but it sounds.
no, I
fine
was
with
just
me.
standing up here
Oh.
this morning. I don't imagine if it doesn't work for them, I apologize. I just thought about it right now as
Okay.
I was standing here.
Does anyone have any other reasons why we should move around those breaks? Thank you so much. Okay, thank you all.
Mr. Hutchings, where we left off yesterday was you had provided us an explanation of how you went down into a granular level, looking at the expenses for the period up to 1946. And now we're at slide 165, which is the net Crown Resource revenue expenses for 1946 to 2019, the last year that we have data for in this case so far. And perhaps you can explain to the court the manner in which you dealt with expenses after 1945.
Sure. So just to recap, we're trying to identify those expenses related to the relevant revenues. As we've been discussing a little bit yesterday, those expenses aren't recorded based on relevant revenues. They're recorded based on the line items in the public accounts. And we went through yesterday a snapshot from 1915 to 1920 of 134 different line items that show up in those years' public accounts in the resource ministries. And using that detail, we can identify, or I can identify, those 3 buckets of expenses: the fully relevant, partially relevant, and not relevant, because we have that detail. So, take, for example, we can separate the parks expenses from the forest ranging expenses, even though they might be in the same department, because the government sets up the departments and the ministries not just to capture direct Crown Resource revenues and not just to manage a single resource. Lands, forests, and mines was the department for a while. So it's doing lots of things. It's managing lands, forests, and mines. So after 1945, and in fact, in the period leading up to 1945 a little bit, the data becomes more and more aggregated. What does that mean? There are fewer items that appear.
The data where?
The data in the public accounts on expenses
Thank you.
becomes more and more aggregated. So we don't have that same level of detail, that same level of granularity that allows a kind of textured review of what exactly is going on. And so 2 things as a result: it becomes more difficult to identify which expenses are relevant and not relevant. And there's an increasing move of expenses to the department and branch levels, which is that overhead amount. And so the kind of head office expenses, these aren't related, these are just the 2 phenomenon I observe happening. The head office becomes larger and larger, and it becomes harder and harder to separate in the branches what's relevant and what's not.
The head office at the branches gets larger and larger.
And at the department as well. So
or
like-
branch and
so-
department, but, but it's moving down from the international head office.
Yes, yes. So we can still see, what is the overhead at the Department of Lands and Forests, that kind of first level of overhead I talked about, which would be the international head office in my metaphor. And so again, that has to be allocated based on the other expenses. So those two things together make it, I think, a very different, and I looked at the data through the 50s, 60s, 70s. It doesn't change, going through that same sort of review that we all went through together yesterday. And I guess I'll cut to the chase a little bit. The long and short is, with that level of aggregation, I don't think there's a reliable way to estimate and to allocate the expenses from these big buckets to the direct Crown resource revenues that I need to allocate them to. So this chart on slide 166 is showing one of those two phenomenon, which is the increasing overhead. So you can see this chart plots overhead expenses. So this would be the international head office in our little analogy. From 1922 to 1953 for the Department of Lands and Forests, or Lands, Forests and Mines, depending how the labels work. As we discussed, those change from time to time. And you can see for the first several years of this analysis, the data are kind of fixed. It's about $500,000. It doubles in 19
I want to stop you when you say for the first, you mentioned, you didn't specify which time period you were looking at on this chart.
So for the first 24 years, it's largely fixed up until 1945. I mean, it varies, but you can see there's a certain amount. In 1946, it doubles. It doubles again by 1951, and it keeps going up from there. So what does this mean? It means that head office, the common costs that have to be allocated, are getting larger and larger. That allocation of common costs is an important thing. And, perhaps unstated in all of this, but in my factory example, you usually assume the overhead costs are a small piece, right? They're the little bit you have to add on, like the lease revenues. If you get to the point where the overhead is just about everything, the allocation procedure loses some of its meaning, because how are you allocating that big basket of costs?
I want to be clear about something. Just because you've got overhead expenses in quotation marks,
Mhm.
just because the overhead expenses are shown as increased in the public accounts, what does that tell you about generally costs increasing in the whole department? Is there a?
Oh, it doesn't. This is one of the two things to look at. So it's, maybe the whole department quadrupled in size. And so the fact that these numbers quadrupled isn't dispositive. But that's why we look to a bit more, if we want to go to the next slide, about then, not only is the head office getting bigger, but the other items are getting more aggregated, so you can't separate them.
So
The
you're looking at
The slide 167.
Oh, okay.
So
Can you give me that again? Maybe the whole department quadrupled in size, or it quadrupled in size, and that's illustrated by,
I'm going to look into that next. Sorry, that's
Okay.
not dispositive. That's what I'm saying. We have to leave the door open that maybe the expenses went up because they were, we just were suddenly managing a lot more trees.
Mhm.
And that's a possible answer.
Cutting to the chase here, when you looked at the data, what do you say about that possibility?
I reject that possibility because the decreasing precision is also manifest in those non-head office expenses. And this is the example on slide 167.
Okay, so take us through that to explain what the problem is.
So starting in 1943, this line item shows up in the public accounts, basic organization, which reflects a move from kind of functional divisions to regional operations, if you will. I think whatever the political reasons for that, there is a move towards, here are the offices and we're going to fund those. And so in the public accounts, it shows up as basic organization, and it shows up one of the big ticket expenses there is field operations, as it's shown here, including provincial parks. So what we have is instead of what we had in the earlier period, where we see forest ranging separate from parks, separate from forest reserves, separate from fish and game. We see this field operations. We know it includes parks. It says so right in the label.
And yesterday you told us parks is not an expense
That's correct.
that, or a revenue source that either plaintiffs or defendants take into account.
That's correct. And that's why, one of the, I think, more significant line items I spoke about yesterday where we agreed was our treatment of parks, that we agreed it was irrelevant. But here we have the problem that, we now know this large irrelevant expenses mixed in field operations with potentially relevant expenses. And don't have a reliable way of separating those. And in fact, by the end of this period, 1940s, the majority of all the expenses were accounted for in this line item that we can't allocate. So we have the problem.
The majority of line items are in
But
field
the-
operations.
The majority of all the expenses are in this basic organization field operations. Yes. So we have basically, that cost allocation problem of the head office allocating it to the factories. We now have the problem that there's really only one factory. So, even the local things have been all blended together. And so we then don't have a way of reliably allocating it. Before the allocation problem was, you had fish, you had parks, you had forestry, you had fire. How do we allocate the salaries of the department, at the general level to those different branches? Now the problem is we have a head office and then we have this other pot of money. And, how to allocate those is problematic. Or in my opinion, it can't be done reliably. So if you look at the next slide, this is a snapshot of the 1951 public accounts. Just to, provide some detail. So I've circled on here 3 numbers that I want to talk about. This is slide 168. Okay. So on the right-hand side, the number I've circled is $9,840,796.17.
Okay.
That's the total for the department. Okay. Now, on the left-hand side, I've circled 2 numbers. The first is $1,551,675.72. That's the main office total. And you can see above there, what's included in the main office: salaries, traveling expenses, cost of living bonus, unemployment insurance, similar things to what we saw in the detail yesterday. What I think I would call overhead, what Professors Bodwin and Smart would call overhead. I don't think there's dispute that is the head office expense. But now, if we look a little further down, see the bottom I've circled, the number I've circled on the bottom left is $6,794,258.13. That's the total for basic organization, which is district offices, including provincial parks, etc. And that's the sum of the 3 numbers above it. In full disclosure, the reason there's 2 pictures there is because the total spilled over onto the top of the next page. But if we do the mental math, we know that 6 million is the sum of the 3 numbers above it. It's just why that number looks a little different.
When you say the 3 numbers above
3
it, can
numbers
you
above it are,
tell us?
I'll walk through them. Yeah.
Yeah.
So see basic organization, and sorry, this is what I was talking about yesterday. The numbers kind of tab in and out as you read an accounting statement. So you can see, several lines up, basic organization is further to the left. Then under it, there are 3 kind of sub items. But those sub items also don't specify what they're doing, right? It's salaries, traveling expenses, maintenance and operating costs. So what do we know from this is $6.8 million was spent doing something for the Department of Lands and Forests, but we don't know why. And we can't, there's no basis here to allocate it between the forestry, the conservation, all the activities we went through yesterday, where we would have some potentially serious amounts of excluded expenses. I mean, parks being an obvious one. And we know that's a big ticket item, even back in 1915 to 20. And we know parks are included here in the label. So you know, what does that mean? We now have, if we add those two numbers together, the head office expenses, which are funding all activities of the department, and basic organization, which is effectively all the operations of the department, almost all the operations of the department, that's 87% of the total. And so, you know, the allocation problem has now become, we don't know what's happening in that whole 87%. And I don't have a way of separating.
Can you remind me from yesterday, if this was a piece of information you had, what percentage of the, let's say, ministry, natural resources or lands and forests, did forestry take up generally in that period?
I don't think that's a number
Okay,
I spoke about yesterday. But I could probably calculate it.
no, it's all right if you
Okay.
didn't give it to us. Thank you.
I don't think.
But you are going to do a similar sort of analysis for the court, and I think you did it in your report to try and get a ratio
Yes,
that made sense to you.
exactly. I think I just didn't do that specific calculation, but I'll also check my report at the break in case I might have.
Okay.
I didn't talk about it yesterday, so I don't want to give you a number and then come back in a couple hours and say I was wrong. So this is the 87% problem here.
And the 87% is if you take the total expenses, 13% is head office and 87% is what's going on in the
No,
branches.
sorry. 87% is the head office plus the branches.
Ah.
So there's 13% left, which includes a few things like forest research and surveys. But what we don't have anywhere is, you know, what portion of that 4 million in salaries at the offices was park rangers versus timber versus conservation, et cetera.
Got it.
Is that?
Yes,
Okay.
yeah, thank you.
And I kept going. I didn't just stop here. We
So
look
you
at-
want to go to the next
Yeah, the
slide?
next slide is 169. This is 1961, 10 years later. And we see we have basically the same issue. So here, there's a couple of things to call out. I've circled 4 numbers on the slide, one more number. On the right-hand side, I've circled the Department of Lands and Forests total spending. And that's the $23,229,038. Here, there was separately recorded in this year an amount for park improvements. So this might be, you know, it's booked as an ordinary expense, but we might think of it as a capital expense on parks. It says their acquisition of land, construction of buildings, etc. $1,791,541.85. It's the other number on the right. But then on the left, I've again circled the 2 numbers from main office, which is 2 million.
On the left,
On the left, I'm sorry, the top left,
yes.
$2,148,312. So again, that's the overhead. And we can look up above to look at the sub items. It hasn't changed, right? Main office salaries, main office traveling expenses, workers' comp. And I don't think anybody would dispute that those are overhead, either for this department or for any company. And then we have basic organization district offices. That's in the bottom left. We again, it's blended together, $16,778,597.37. And again, looking above, there's no additional texture or granularity there. It's salaries, traveling expense, operating. Not sure what we're maintaining, not sure who those salaries are for, and not sure what they travel for between forestry, fire protection, parks, wildlife, you know, all the different functions that the department carries on. And we know those can be meaningful. I mean, fish and wildlife in particular in the early years were quite meaningful. And I should say,
When you say meaningful, do you mean high?
quantitatively, you know, they weren't one of the $9 items we looked at yesterday. They were one of the six-figure items we looked at yesterday. You know, when the whole total was smaller than this total, because we were looking at the 1910s. But I highlight Fish and Wildlife or parks because those are both quantitatively meaningful in the period where we have separate data. And we both agree, and by both, myself and Professors Bodwin and Smart, that they're not relevant. But now, you know, they're sort of blended together.
Sorry, what was the word you used? Substantively?
But
Meaningful?
Quantitatively meaningful.
Quantitatively.
Sorry, Mr.
meaningful.
Shep. That's what I meant by meaningful. It wasn't that, just that the number was, you know, not the $9. It was one of those meaningful line items from yesterday. Rather than, you know, meaningful based on what they were doing. So I called out as an example.
Now, Mr. Hutchins, you've provided two snapshots from 1951 to 1961,
Mhm.
but can you provide us with some guidance on the duration that this, I'm going to call it a problem of or problem of aggregation, excuse me. Can you just give us some idea if the duration of that problem, does it correct itself or?
Oh, sure. The answer is no. If anything, the aggregation problem becomes more significant as time goes on. That is, there are fewer and fewer line items reported in the public accounts at the same time that more and more money is being expended.
And sort of the year this starts was when?
So basic organization first appeared in 1943.
As a
As an
description.
item, as a description. And then, you know, within a couple of years, it accounted for the majority of the expenses, which is why I changed my method after 1945. But I'm providing here just some snapshots that, you know, in the 50s, it persisted. In the 60s, it persisted. I'm not going to look at some more recent data to show it still persists today. But if I were to generally describe it, over time in all the departments, there's just fewer and fewer details provided. At the same time, that more and more money is being spent.
I'm just going to ask for some assistance from the reporter. I've sent her a note. Beautiful, thank you. Just let the reporter get settled. Thank you.
So, Mr. Hutchins, let's continue then, I think probably with slide 170.
Yes. So this is just, I think, saying in words what we've been trying to show in the last couple of slides. That as the groupings become more aggregate, it's increasingly likely to include a mix of relevant and irrelevant expenses. And I'm being generous in saying increasingly likely. We know it includes a mix of relevant and irrelevant because, you know, provincial parks is one example that stands out, but there are other activities. And this effect is compounded by overhead allocation because it becomes a situation of, I mean, the tail wagging a dog to a point. If 87 or 88% is all blended, you're then relying on, you know, the 12 or 13% that's not blended to allocate the 88%. And that's
Blended, relevant and irrelevant.
exactly, sort of blended,
Okay.
relevant and irrelevant.
So if 87% is blended, you say then at best you can rely on 13%.
Right, and the determination you make on that 13% will then determine what happens to the 87%, which is why I use the tail wagging the dog metaphor. I don't know that there's a hard and fast rule, but a lot of times when you would look at overhead expense, say in a company, you know, it might be reversed, right? There's a lot of stuff happening at those factories, and the head office costs we're talking about tend to be smaller, and that's why you feel, you know, kind of good. You can reliably allocate them because you have a very good sense of the activity that's happening in each of those factories, and there's a little bit left over to allocate. But if you're allocating 87 or 88%, based on only the 12, like that's a little backwards. And I don't think that's a reliable way to allocate the 88%. Particularly given, the 12% that's left tends to be a couple of one-off groups that, wouldn't be expected to be representative of the 88%. Does that make sense?
Mhm.
Okay. So that's what I mean by it's compounded. So you could treat it all as overhead, but then you're not left with any factories in my analogy.
Right.
So, and we can talk a little bit more about the problem, but perhaps I should say a little bit about what my solution is.
Do you want to
first.
deal with what your solution is now?
Um,
Or did you want to?
No, I'll talk a little bit about the more recent years, I guess.
Okay.
So this is slide 171 is a graphic from my reply report. Because Professors Beaudoin and Smart and I do have a difference of opinion on this after 1946 period. They continue to use the public accounts. But I want to highlight, some of the arbitrary, what I think are arbitrary changes in expense reporting has big impacts on their analysis, which is illustrative of why I didn't think it was a reliable to go down that path. So between 2000, so what are we showing? This is a chart from my reply report. It is plotting on the vertical axis the percent of expenses that Professors Beaudoin and Smart exclude in their analysis. So for the 8 years, 2004 to 2011, looking at natural resources management, which is one of the programs in Ministry of Natural Resources at this stage, but the forestry department. And I just call it the forestry department because the name changes a lot.
The ministry name changes.
Yeah, the ministry name changes. They exclude about 36, 37%. That's the blue line there. See, it's flat across. That's the average. It fluctuates year to year. But then from 2012 to 2019, they exclude about 10%. What do I mean by exclude?
Yeah.
This is when they go through the same kind of 3-bucket exercise that I go through. They put 10% in the not relevant category in the later years, and they put about 37% in the not relevant category in the earlier years of this time period. Now, I've checked, the public accounts do provide, and we'll look at a snapshot of one in a little bit, descriptions of what these programs are. As time goes on and the data becomes more aggregated, they provide a narrative, if you will. Oh, excuse me. They provide a narrative, if you will, about what a program does. Paragraph, 2 paragraphs. And it didn't change between 2011 and 2012 what the program was doing. And the program is this natural resources management program. But what did change is how the data were recorded in the public accounts. And what I'm trying to show here is if the program didn't change, but you wouldn't expect the amount of expenses that are relevant or irrelevant to change.
And when you say, when you do this comparison, is this between the 2 periods that are illustrated on slide 171?
That's correct.
Okay.
So in the kind of distinct change is between 2011, 2012.
Yeah.
Compare the descriptions on each side to be safe. We're going to read one together in a little bit, but if what the department says it's providing hasn't changed, it just changes the accounting. You shouldn't see a big drop in expenses or an increase. I mean, to change either way. If the program being provided hasn't changed, you wouldn't expect to see the cost of that program change. Perhaps that's a better way to put it. But if we go to the next slide, this is slide 172. So this is a snapshot of the data provided by Professors Beaudoin and Smart. It says a screenshot from expense.xlsx. So that's the Excel file they provided that has all their expense input data.
Can I just stop you for a moment?
Yeah.
Does the data here you're looking at does it help? Are you helping to try and explain the graph on page 171, slide 171? Are they
Sure.
related?
It's a little bit related. Slide 173 will give you the percentages. So
Okay,
I first just want to say, kind of explain what this data looks like, because it's the first time we've seen the spreadsheet together.
Okay.
And we're going to see it a lot more today. So what am I looking at here? So you see that the first yellow highlighted row.
there seems to be yellow and orange.
Yes, that's how I received it from Professors Bodway and Smart. I didn't want to remove it. The red boxes I've added on top for purposes of our discussion today.
Okay.
But the first yellow row, natural resources management, that's the kind of total program expense, $223 million. So in 2005, the department spent $223 million on this program. The line items that come after it that I put in the red box are the line items that make up that total. So you see there's forest management / forest industry, fish and wildlife management, land and water management, field support services, crown land use planning, and then this last row, natural resource management, NES.
But these line items make up the 223,000.
I don't have the arithmetic on the side, but if you
Okay.
add up those six, you get back 223 million.
Oh, got
Yes,
it.
sir, we're in the 2000s now, so we're dealing in bigger sums. And that NES stands for not elsewhere specified. So this is basically calculated as the total, the 223 minus the 5 line items they record. I think I spoke a little bit about this yesterday, that there are some years where they don't record every single line item, and so 155,000. This is that other row, if you will. But those are the line items that are used, those 6, and Ontario Parks down below, to make up the total operating expenses for this group. Now, this is just the way it's reported in 2005. And I have this little blue box here. We'll come back to that throughout the day too. The way Professors Bodway and Smart indicate relevance is under this column called exclusion. That's the third column from the left. You see exclusion, 0, 1, 2. So 0 means not excluded, which means included. So that's the fully relevant. 1,
So just so 0 included means
fully relevant.
fully relevant.
What I would call fully relevant, include the full amount. 1 is excluded, so you don't include any of it. And then 2 is overhead. That's just how we're going to see reported in their data. I just want to provide
Okay.
that. We'll come back to that in more detail later. But so this is what the data look like and how those expenses are added up together. So what I'm going to be looking at and what I plotted in the chart on the prior slide, 171, is the percent of that top bold yellow line, natural resource management, that they exclude rather, for the period before and after 2011. So this is a snapshot of how I do that calculation.
Okay, but before you go on, there's just a couple questions I think you
Sure.
need to clear up here. Let's take a look where it says resource wood. The second item, it says there's a 1 beside natural resource management 223. See that?
I do.
And so if the 1 means don't include any of it,
Uh-huh.
does that mean that Bodway and Smart said that nothing in natural resource management gets counted as an expense?
No, what they're doing here is because that's the total row and they have the sub items below. You can't include the total and the sub items. That'd be double counting. So that total row is excluded because the constituent parts are then included or excluded.
It's not an identification that it's relevant or irrelevant. It's just showing what they counted.
That's right. That's right. For the sub items, it then gets operationalized as what they counted or not. Also important is, you'll notice to the left of wood, there's no category assigned for that.
Yes, I see that. Yes.
That's again a signal to their computer program to not include that row because it's not categorized. That's the way they deal with these totals.
So these zeros and ones and twos get fed into a computer program and spit out data somehow. Is that what,
Uh, The computer files take these data based on the information provided in these data and the instructions in the computer file. They generate other data and analyses.
This is pre-AI.
okay.
Yeah, this is pre-AI. It's the spitting I was taking exception to, Mr. Schachter.
Okay,
Um,
All right, so if I, just to get this right,
Yeah.
the one in the yellow line at the top, the one beside natural resource management is simply an instruction to the program not to count it. It's not a label that it's relevant or irrelevant.
Right, for the totals, and that's why I say they also, don't assign a category to it. So that's, kind of another instruction to the computer not to count. For all the other items, the zeros, ones, twos are their determination. And in fact, it's those zeros, ones, and twos I used to then map to my rules yesterday, because they have the same data back in 1915 to 1920.
Okay,
Does that make sense?
yes, thank you.
Okay, great.
so can we just sort of stick with 172 slide? Going down in the ones that they did the computer code did discuss or did deal with,
Mhm.
there's a 0 under fish and wildlife management.
That's correct.
That means it's fully relevant in their view.
Uh,
Is that right?
That is how the computer code will read this. That's right. So perhaps there's some foreshadowing. I raised in my reply report some concerns that for a 15-year period, they included fish and wildlife management.
They, Bodway and Smart.
Bodway and Smart included fish and wildlife management because it was categorized as a forestry expense in their data. This is one of those examples. When I do the calculations here, I exclude it for them because they do say in their text and in their appendix, they exclude it in every year. So I haven't changed their data here, but when I made that chart, I did exclude it because they say they meant to exclude it. We're going to talk about that example.
Okay,
a
so
bit more a
we're
little
gonna
later.
we're gonna get to that. So I was just a little bit confused by that. Okay.
Okay.
Did you want to go to the next slide?
Yeah,
then?
maybe if we go to the next slide, we're going to see a very similar picture.
So you're moving from 2015, 2005 to 2015 on slide 173.
That's correct. So this is 10 years later, slide 173. We still have the bold yellow row at the top. And we have the sub items underneath. And then we have the italicized yellow row, which is the everything else category. But what you'll see is the labels have changed. On 2005, we had things like, excuse me, forest management, fish and wildlife management, land and water management. Probably infer from that what they're managing: the forest, the fish and the wildlife, the land and the water. But in 2015, we still have forest management, but the fish and wildlife, the land and water has gone, and we have a new large category called regional operations. Now, regional operations is not particularly descriptive, but like the change to basic organization in the 50s, just reflects a different way of recording the data. The total expenses have gone up, but it's been 10 years. But what's more impactful on the analysis is that you've lost some more of that. Even what little texture we had in 2005, we now have lost in 2015. And the result of that is that you can't exclude things like water management or fish and wildlife management that Professors Bodway and Smart did exclude in 2005. This is an example of what is now driving the difference on that chart we looked at a couple minutes ago. And perhaps slide 174 is the clearest. I can highlight the numerical impact of this. So I don't plot the totals here anymore. I just show all the sub items, but if we break out our calculators together and add up all those numbers This is slide 174. We'll get back to totals we looked at earlier. Okay. But I do this to highlight, in 2005, there are 2 items included: forest management and field support services. Everything else is excluded. And here, Mr. Schachter, is where I've excluded the fish and wildlife, because in their discussion, they meant to exclude fish and wildlife.
When you say in their discussion, what do you mean? In their
In their
discussion?
report and in their rebuttal report and in their SIR reply, they say that there's a part of their computer code that excludes fish and wildlife management. So I treat it as excluded here for purposes of this comparison. We see that's $98 million of the $223 million total we looked at before. I don't show all the arithmetic here, but that's what it adds up to.
And it says 44% of 223 million total NRM is natural resource management.
Right, that's the program that we're talking about. So these are the sub items that make up that program. So, when we looked at basic organization, remember we had the 3 sub items of salaries, contingency. This is what adds up to the natural resource management program.
And there's something called OPEX. What's
Operating expenditures, just so we
Okay.
could fit it on the line. But what that means is, 44% is excluded. Now, again, between 2011, 2012, or over this 10-year period, the program description stays the same, particularly on that 2011, 2012 break, which is where this change in accounting happens. But then, take 2015 as an example, because of the additional or the additional aggregation, the lack of detail, only 22 million is excluded, which is 7% of the operating expense in that year, or 8% after we allocate the overhead, because there is one overhead line item here of policy and planning. So what does that mean? Well, despite no change in what this program is doing, the spending on it goes from 56% devoted to direct ground resource revenues to 92% going to direct ground resource revenues.
92% being 100% minus the 8%.
That's correct. And that, I think is just a symptom of when there's highly aggregated data and you can't carefully allocate the sub items, you're very sensitive to these accounting changes. This is, as I say, very similar to what would have happened by just counting basic organization in the 50s and 60s, when we know it includes a bunch of stuff that's not relevant.
Now, just to be clear, the examples here about what's excluded,
Uh-huh.
those aren't the percentages that you, in your calculations, excluded.
That's correct. I take a different approach to expenses from 1946 to 2019.
These are snapshots of how Bodway and Smart dealt with it.
That's correct. And let me say, I don't agree with the 2005 treatment. What I'm saying is the methodological concern is when there is highly aggregated data like this, the results can shift a lot despite no change in the services being provided.
My understanding is that this 2005, 2015 was an example of why you say it was unreliable.
Exactly. That makes sense.
Mhm.
Okay. So let's read together the program description. This is for the Natural Resources Management Program in 2015. I mentioned before, the public accounts have a qualitative, couple of paragraphs. If you're reading it, what is this providing? And it has leadership and oversight of the forests, water, renewable energy, aggregate and petroleum resources. What are some of the objectives? I've highlighted some of them that are mainly unrelated to direct ground resource revenues, because in saying 92% is relevant, what that means when it comes down to doing the math is 92% of these expenses will be counted only against direct ground resource revenues. And if we think back to that equation that I like at least, with the three buckets, that's implicitly saying that only 8% is about indirect crown resource revenues, income taxes, et cetera, or about other benefits to the economy. Like what's being talked about here, promoting jobs and investment, managing fish and wildlife resources, promoting healthy and sustainable ecosystems. I'm not sure how to allocate it, but knowing that some allocation is necessary based on, say, this description, I don't think it's reliable to just allocate it all.
And when you say 8% of all expenses,
In this year, that's correct.
Were excluded.
That's correct. So that's, if you're saying 92% support direct crown resource revenues, I'm suggesting an equivalent statement is that 8% support all the other objectives, including the indirect taxes that Professor Mintz and Mr. Reardon talk about, the general prosperity of Ontarians and Canadians that they talk about, GDP and jobs that Professor Stiglitz and I have spoken about.
So you've explained a problem and you alluded to, and I think you told the court 15 minutes ago that you had a solution.
Yes, I did have a solution. So my solution, well, there's one more example. Maybe we'll.
You want to use another, go through?
No,
another
why don't we
example?
skip ahead to 179? I can talk about my solution and then we can talk about mine. And I feel like I shouldn't keep people in suspense. So, given these examples and factors, this is slide 179. What I do is say, look, for a long period of time after the we lose the Irving accounts, but say from 1898 to 1945, we have very reliable granular data on revenues and expenses. And I think it's reasonable to estimate a relationship between those revenues and expenses. You can think of this as a margin and fairly stable, particularly in the more recent years. And I take a ratio of those expenses to revenues over that whole period and carry that forward. So I estimate that from 1898 to 1945, the average per year result was 31.9%. What does that mean? For every dollar of direct crown resource revenue that was collected in RST, the crown spent 31.9 cents. Probably should have used $100. But over this period, right? So there's significant net crown resource revenues. And I take that 31.9% number and I apply it going forwards. Because, well, a couple of reasons. One, these industries are all established by this point. The data, there is a relationship between revenues and expenses we would expect. As Professor Stiglitz talked about, it wouldn't be particularly logical to have large fluctuations and large amounts of losses. And I think that's a more reasonable approach than going down the cost allocation approach after 1945, because of some of the things we've been describing, that we know we have a mixed bucket of costs. The mixture in that bucket has gotten even more mixed, as I was talking about with the 87%, the 88%. And doing a cost allocation to then allocate it to the revenues becomes increasingly unreliable, in my opinion. So instead, I estimate a relationship between revenues and expenses, which is not uncommon if you're doing a private company valuation, for example.
but in the early part of the century to the latter part of the century, would you have data or an understanding of how much in another industry or in a non-governmental place, in a non-governmental sector, the cost of producing $1 of goods went up or went down? Like, would that surprise you that there would be a significant change in either direction? I'm not anticipating the answer.
I mean, it's certainly something to consider. I think here, given the nature of the activities of the regulation and collection support of established industries, and the increases we see in, say, technology, like a lot of the surveys are now done by drones. In fact, a lot of mineral companies no longer even have people to weigh the stuff. They take pictures and they can take pictures. I'm simplifying, but based on math, they can figure out their productions. So
There are
being-
fewer of those drones this week.
Yeah, yes. A dangerous time, I guess, to be operating drones. But I'll use that as an example. But it should be, I think, offsetting productivity gains and costs. And another thing to remember in here, I think is important, is increasingly the government is collecting based on these expenses through indirect revenues. Remember that chart I started with about 100 years ago, 30 cents of every dollar came from direct Crown resource revenues. And today it's 0.2%. And we're not capturing any of those indirect Crown resource revenues or these other benefits to the economy. So given the very narrow definition, I feel confident that this is the right. In fact, it may even be an overestimate of expenses going forward because of the expected productivity gains on monitoring. So that's what I do for everything that's not hydro. For hydro, I continue to use the 2% because nowhere in this time period does the public accounts report the specific hydro expense. So I think I talked about this. I use the 2% based on like CRA expense ratios, and CRA is Canada Revenue Agency. And I use the spectrum expenses. The federal government produced, when the department produced estimates of spectrum revenues in the territory, they also produced estimates of their expenses allocated. It seemed like a reasonable methodology as I could read it. Not having access to the data would have been difficult to do it myself or to come up with a reliable alternative. So I adopted it as it was. And I will say I have a couple of checks later on when I talk about the differences in the expense treatment between myself and Professor Beaudoin Smart in more detail by resource. A corroborating method why I get a lot of confidence in my 32%. But I should go back to slide 176.
Yeah, okay, back to slide. What does this slide tell us?
So this is just taking another example of mining. A lot of the examples I focused on about aggregation were in forestry. Forestry is the primary area of disagreement, but I don't want to leave out the mines. So this is a snapshot of, again, Professor Beaudoin Smart's data, looking at mining expenses in 2005. And you'll see the main expense item there under mining management, second to last row that they include, is mineral sector competitiveness, which is the only line item that appears under the mines and minerals program, separate from the capital expenses. So if we go to the next slide, this is just a
Just
screenshot.
before we leave this slide, I'm sorry, Mr. Hutchins, there's yellow highlight and red numbers.
That was how I received the data. I didn't highlight it.
So you're
So-
just drawing attention to the mineral sector competitiveness.
Yes, and I think the snapshot from the public accounts on the next slide, 177, is helpful. If we look at the program that's included, mines and minerals program. So what is the program is kind of one step down as to how the department reports its activities. And then we say, okay, what happened within that? Like, is there any texture? The only thing we see is mineral sector competitiveness. So it doesn't, break it down and say the mines and minerals program is X dollars for research, Y dollars for recorders fees, Z dollars for something else, like we saw back in 1915 to 1920. And so again, we can look at the program description on the next slide, 178. Highlighted this one, but the program is focused. Let me back up. Professors Beaudoin and Smart include all of these program expenses as deductions against net grant resource revenues. It's fully included. And so I'm trying to highlight that even this basket has other things mixed in there that we would like to separate. There are things that this program does that are not related to direct Crown resource revenues, as both of us measure them. both of us being myself and Professors Bodway and Smart. So as you see here, the program is about contributing to prosperity for all of Ontario, but it also provides province-wide geological mapping, 24/7 access to geoscience information, international marketing, etc., helping the global exploration industry access Ontario's mineral potential, attracting investment, exploration, and mineral development. So probably all laudable Crown goals, but goals that would show up, benefits of those would show up on the other two items we're not including, right? Indirect tax revenue. Some of the benefits would show up as indirect tax revenue, or other benefits, the prosperity for Canadians example. And as they say here, they're going to attract investment and development. The Crown's reward for doing that will be more than just direct Crown resource revenues.
Taxes.
Taxes, higher employment rates, those sorts of things. And to charge all of the expenses against the direct Crown resource revenues is, I think, just that improper allocation, right? That's putting all the charges on the one factory. And if we were then to come back and do a similar exercise for Crown indirect net Crown resource revenues, we would have to count zero costs because we've already allocated them all to direct Crown resource revenues. And so then you'd get illogical results that, there are no costs supporting these indirect tax revenues. That sets us down, kind of the free lunch path again, that just doesn't make sense to an economist. Okay, so I think I've wrapped that up. If we want to turn to slide 1.8, or did you want to stop, Mr. Want to keep going?
Oh, I take it the reporter's okay here? We're doing fine? Okay, so let's continue on. Let's move on to getting, I guess now we do the number crunching, I guess, the calculation of the net Crown resource revenues.
Yes, having taken all those principles and some of the data snapshots we looked at and using a computer, the computer spit out these results, which is to say, applying this. So this is the culmination of the maps we talked about, identifying those revenue line items we talked about for each resource, looking at the expenses, looking at the arbitration papers. So what is the math here? In each year.
So we're at
18
181.
Oh, yes, sorry, we're at slide 181.
Thank you.
So, the takeaway is 1.044 billion or $1,044 million in nominal net Crown resource revenues. That's the leftmost number column labeled nominal. And what is that? Well, that's a sum of 170 values from 1850 to 2019. In each of those years, it's the sum of all the revenues, which can be in some years RST specific revenues, some years it's province wide, and we do all those multiplications and overlaps using the maps we looked at, minus the sum of all the relevant expenses. And again, the relevant expenses are those that are fully relevant, plus those in a apportionment of overhead allocated to the treaty territory based on the same geographic allocation principles used for revenues, those annual department reports by district. Okay. And that's that number. Now, again, say for 1850 to 97.
1850 to
1897.
1897, yes.
There are two 97s in this data. From 1850 to 1897, it's just the adding up of the revenues and expenses. 1898 to 1946, it's as I just described it. From 1946 onwards, it's as I described it for revenues, minus 32% of those revenues as expenses, and then hydro and spectrum are dealt with on their own using the other rules I discussed.
Can I just see if I get this then?
Sure.
This sum of all 170 values minus the sum of all relevant expenses as defined is the exercise you considered for, I'm going to call it period 1, 1850 to 1897.
Yes.
Same exercise from 1898 to 1946.
Yes.
And
Can I add a
But
footnote?
for,
But for the allocation, the geography allocations.
but for geography.
Yep.
And for the third period, same exercise for calculation of revenues, but a new way of calculating expenses.
That's right.
Now, when you calculated these nominal amounts,
Mhm.
I don't believe it's in the slide, but I think you had talked in your report about the possibility of going negative in any one particular year.
Yes,
Did that happen in your analysis?
yes,
And so in your adding up to get 1.044 billion, when it as it was a negative year, what did you do with the negative? Did you stop at zero or did you did you give the Crown the benefit of the negative amount? If I can phrase it that way in their calculation, not the benefit is the wrong word.
Guess I'll give you the nerdy answer of I added the negative amount, which
Yes.
means I subtracted the loss. So I didn't set a floor at zero or anything. By that, I mean, had I ignored those years that were negative, these numbers would all be higher. But I didn't, I included those. So,
Included negative
I
years.
included negatives. So if it was 100 this year, negative 50 last year, my answer would be positive 50.
In other words, you included an amount for every year.
That's correct.
I have it right.
And did you want to continue with the explanation of the balance of this slide?
Sure. The next three columns provide the present value estimates of that first column. I'll get into a discussion in a little bit about how the mechanics of calculating these present value factors. But just for completeness on slide 181, the second column is B&S long-term bond. So that's Professor Bodway and Smart's preferred approach of using the yields on Canada long-term bonds that averages about 5% over the period. And that result is 8,897,000,000. The next column is BTA, which is Band Trust Account. That's one of the calculations I did. And that result is 9,878,000,000.
So not much greater than the long-term bond rate. So, I don't think it's any disagreement that that's about 5.4%.
That was 5.3%, but a little
Oh.
little higher than
Might
long-term
be about
bonds.
around 5.3%. Okay.
And that's unsurprising for the last several decades. They've been kind of set to mirror each other. And then the final column is the preferred approach, or my preferred approach, that Professor Stiglitz talked about last week, which is a diversified portfolio of 60% equity and 40% government debt. And that yields higher results. That averaged 7.2% over this period. And that result is 56,898,000,000.
And it says to 2019, but I think you testified yesterday that those are numbers brought forward to March 2020.
Yeah, March 31st, 2020. Or
They have,
they have
those
been-
numbers have been brought forward.
Yes, yes. So the revenue and expense data are through March 31st, 2019. And then I've expressed them in March 31st, 2020 dollars for the present values.
Oh. So the nominal rate has not been updated.
That's right. The nominal amount will be the same in March 2020 as it is today. Because there's no adjusting for the time value of money. Does that make sense?
No, it hasn't been updated with new data
That's right. It's only through
to
2019.
2019.
That's right.
Yeah, Madam Justice, all the experts kind of stopped at March 31, 2020 for consistent data. And really what has to happen now, if there were to be an award of X dollars as at March 31, 2020, there would have to be a calculation if you wanted to calculate it to 2023, for example, or 2024.
Okay. Okay,
Yeah,
so I'll
Yes, I
talk-
think we should continue on.
Sure. So let me talk about reconciliation of my results with Professors Bodway and Smarts and CRRs. I spent a lot of time yesterday in the detail about, the revenue per resource, the expenses line by line, putting it all together. Where are the big differences? So on slide 183, here's maybe the two-sentence takeaway. We generally arrive at similar gross revenue numbers and similar geographic allocations. That's what we talked about yesterday. That's, perhaps the result of the 2021 collaboration. So the difference in our results, and I know the bottom line differences I've heard people talking about are large, are driven by treatment of expenses, and particularly for forestry. I just want to explain that a little bit.
Did you want to explain it with the graph or without?
Yep, I guess I'll use this graph. This is slide 184, which is figure 11 from Professor Bodway and Smart's nominal values report. Just to explain how, even from their results, you can see what really matters is forestry. So this is a chart that shows by resource for mining, forestry, and land and water. And just to be clear, land and water includes hydroelectricity in their calculations. The revenues in the red line and the expenses in the blue line. They also include the total in the bottom. That's just an adding up exercise. So, looking at this, you can see there are apparent gains in mining. The red line is above the blue line, I think in every year, certainly just about every year. The land and water shows fairly significant gains. And forestry shows losses. But you can't really add up the areas between, math people and economists would say, you can't integrate that area. So, adding up that whole area between the two lines would be a measure of profit or loss. Right? But to do that, you have to have it on the similar axis. So the next slide shows you scale all of these to be on the same axis, so you can compare the areas.
Just to go back to slide 184.
Yeah.
Can you explain how they're on different axes?
Sure. So if we look at the bottom left chart, land and water, see it starts at 0 at the bottom there on the vertical axis, and it goes up to 200. So that red line peaks out in 2000 at, I don't know, maybe $180 million. But if we look at forestry in the top right, it goes from 0 to 800 million. And actually a little bit above 800 million, because that blue line goes up over the line mark 800 million. So maybe the chart goes to 900 million. I can't quite tell as I look at the screen. So if you want to think about it this way, all of the variability shown in the bottom left chart, land and water, happens between the 0 and 200 mark of the forestry chart. As you can see, the first vertical thing. So, if it looks like the land and water chart has, say, topped out or, gone all the way to the top, that only means it's gone up to the first of 4 lines on the forestry chart. Does that make sense?
Thank you.
So put this together just because someone had been asking questions about, can we add up the areas? And if you wanted to go through that exercise, you'd add up the areas on this chart. And this shows, the gap between revenue and expenses for mining and land and water, which is the positive net ground resource revenues, are much smaller than the gap between revenues and expenses for forestry, which are the negative numbers, right? Because the blue line is expenses is above the red line, which is revenues on slide 185. And so those losses more than offset all the gains
Of past years.
of mining and
Oh,
land and
of the
water.
other
And
revenues.
of past year and of past years. It offsets everything.
So the negative losses in forestry after, it looks like around 1960-ish,
Yes,
offset all the gains from 1850 to 1960. Is that what you're saying?
yes, the losses in forestry after 1960 offset all the gains in forestry and all the gains in mining and land and water
And
From all
that's,
sectors.
from all sectors for all years.
and that's Bodway and Smart's analysis.
That's correct.
Not yours.
That's correct. So I think slide 186 is another way of bridging the gap, if you will, between our numbers. So this is the first time we've seen this table. So I'll try to walk us through it on 186. These are all in nominal dollars. These are all in millions of dollars. The first line is from Professor Bodway and Smart's rebuttal report. That's I think August 2022 event. And in nominal terms, their net ground resource revenue estimate was minus 1,862,000,000. In present value terms, this translates to, I think, the negative 7.9 or 8 billion. I think I've heard
Using their
using their
rate,
rates of
bring forward amount.
exactly. Just to provide some context, because I don't know that anyone's spoken about minus 1.862 billion yet, but I'm going to do it in nominal terms because there are, as you know, separate disputes on the bring forward rate.
Right.
So then line 2, Professors Bodway and Smart make some revisions in their SIR reply that I'll talk in a little bit, where they remove some forestry and transport expenses. So as I read their December 2022 SIR reply, they're now starting from minus 1,619,000,000. Then all the way down at the bottom, row 8 in blue is my estimate, the 1,044,000,000 we've been talking about. And what I've tried to show here in between is how in 2 or 3 steps, you can reconcile that full amount as a way of helping focus our attention on where are the quantitatively substantive issues. So first, this is line 3. I take Professors Bodway and Smart's analysis, and I just remove forestry after 1960. So I don't include any revenues from forestry. I just remove those losses. So that's that big, the big hump we saw on the blue curve. This is what Professor Stiglitz spoke about last week. The 60, 70 years of losses. So if we just remove those losses from forestry, we end up at positive 501 million. That's about 73% of the difference between my total and theirs. Now that's just removing the losses. In line 4, and I should say in the dollar impact of that is 2,120,000,000 in nominal terms for RST.
So you said line 4. Did
Yeah,
you-
and then I want to move to line 4. Sorry,
Okay.
that 2 billion was in line 3.
Mhm.
So
Yes.
the columns, the 501 is the new estimate, as I described it. The impact is the change from the prior line. So that's a $2 billion adjustment.
So 501 is 500 million.
That's correct.
Go ahead.
So we're saying if we estimated net ground resource revenues using their method, but zeroing out forestry after 1960, the result would be a positive 501 million.
It would be positive using their analysis.
Using their analysis, so accepting all of the other expenses, the transport, the other foresters, all of the items we talked about yesterday and that they talk about in their rebuttal reports. just putting forestry to zero after 1960, we got a $501 million positive net crown resource revenue. And the kind of incremental impact on their analysis is about 2 billion.
How do you go from 1.6 billion, negative 1.6 billion, add half a billion and get +2?
Oh, sorry, no. That is a little confusing. Let me explain. So the 501 is the result. The next column is just tracking how big, what was the impact? So the impact of excluding forestry losses
Yes,
was $2 billion.
okay.
That 2 billion takes us from the 1.6 to the positive 500. Is that a little clearer?
Better, thank you.
Okay.
It's just minus 1.6 plus 2.12 billion equals positive 501 million, a billion,
501 million.
501 million, excuse me.
That's correct. Okay. So that's the first part. Does that make a little bit of sense? Okay. So then the next, kind of hypothetical is, well, what if it wasn't zero after 1960? What if it was?
It wasn't zero? What if,
Okay,
what
what if
wasn't?
forestry net crown resource revenues wasn't zero after 1960? What if my results for forestry applied after 1960?
So you would add, let me see if I've got this.
Mhm.
You would add 391 billion.
Million, but yes,
Mil-
that's right.
It's in millions.
Yeah, these are all in nominal amounts, so million, yeah.
That's right. So we'd add 391 million. And the total estimate would be 892 million. So that's a big difference in the forestry. And that makes sense given the chart we just looked at from their analysis, that they show meaningfully positive NCRRs for mining and land and water. It's really just forestry that, as you said, wipes out all the losses and all the other revenues in all the other resources. I'm sorry. One more adjustment here, line 5 is excluding transportation expenses. Okay. So this is adding $4 million, which takes us up to 896 million. Now, you may ask, why am I including 4 million as a key area of disagreement? And here, I do need to talk a little bit about the bring forward rates, because most of these transportation expenses, we talked about them yesterday, they were the colonization roads of the late 19th, early 20th century, and the railway subsidies also in the late 19th, early 20th centuries. And so when we bring those forward at either Professor Beaudry-Smart's or my rates of return, the impact of transportation becomes higher. Forestry is always still the biggest ticket item, lines 3 and 4, but that transportation one will become more important in present value terms. So just to recap, taking just my forestry expenses after 1960 and removing transportation expenses, taking everything else the same in Professor Beaudry-Smart's analysis, that puts us at row 6, which is an NCRR estimate of $896 million, or $2.758 billion more than theirs, more than their original amount. And that accounts for 95% of the difference in our estimates. That 95% is saying, if you start at negative 1.8, their number, and you think of my number here at 1, we've gone 95% of the way there.
1.044.
1.04 billion. And all other differences, some of which I'll now talk about, might be large in quantity, but are small in magnitude.
So let's see if I have this right. You say if we start off by accepting Beaudry-Smart's nominal values for revenues
And expenses.
and expenses, okay,
This is everything.
and then we substitute your forestry expenses and your transportation expenses. we will arrive at line 6.
That's correct. So I now propose to, for completeness, reconcile each of the resource expenses, even though I've perhaps given it away that what really matters is forestry. But out of completeness, I just want to tick through that, even on the details, we don't have that many disagreements. Or they're not quantitatively important. So the first here on slide 188 is land and survey expenses. So what I'm graphing here from 1898 to 1945 is the percent of province-wide land and survey expenses allocated to the RST. Now, there are 3 lines on the chart. The orange line at the bottom is how much Professors Beaudoin and Smart allocate for all land-related expenses. This comes from their work papers. So you can see it's somewhere between 1% and 8%, I guess, year by year. Now, there are 2 other lines. The teal line that's dashed or dotted, whatever your preference, is what I've called Hutchings land non-survey. So for land expenses that weren't survey expenses, I allocate them based on acres of land sold. I think we looked at some of those snapshots of the townships and how many lands were other than free grant lands. And you can see in some years I allocate slightly less, in other years I allocate a bit more, but there's a general correspondence. Certainly there's a correlation between those two. The years they allocate more, I allocate more. I generally allocate a little bit more. But then the higher line, the solid blue line, is surveys. And as I discussed yesterday, both in the period before 1898, so using the Irving survey data, and in the period after 1898 to 1945, I include all survey expenses, even though I know some of those surveys are not for the benefit of direct Crown resource revenues. I think we looked at the example yesterday of highways. There was notes in the department reports. And I allocate those surveys also based on the acreage of free grant lands. And that leads me to have a higher, I'll say, allocation percentage for surveys than land. And because Professors Beaudoin and Smart and I correspond on our land, I allocate more survey expenses than they do to the RST.
Just so Beaudoin and Smart only have one orange line. Where's theirs? Is the orange line including in surveys as well?
Right. They use it for both. So you can imagine there are 2 pots of expenses. Okay. There are survey expenses and there are other land related expenses like the land agent salaries, etc. They allocate both pots the same way using the orange line. I allocate the first amount related to surveys based on my blue line, which is higher than their orange line, and the second amount based on my teal line, which correlates with their orange line. At the end of the day, I end up including more.
And just so that I can understand this graph, do we have the areas underneath the teal line? Do we add that up to the blue line? Or is the blue line an aggregation of surveys and non-survey?
No, they're 2 separate amounts. So I use the teal line for some, I use the blue line for the other. If I were to make a blended line
Yes,
that was a comparison to their orange line,
yes.
it would be between the teal and blue. So always above the orange. Is that helpful?
Yes.
So that's really all I have to say on land and surveys. I think we said yesterday, the land revenues were quite close. I think we differed by $1 million. So we can talk about, I think mining is next. I think this is also a relatively short chapter.
Yeah. So maybe we can go through that. Is the reporter okay to continue? For another 10 minutes or so? Okay. Court, okay?
I think we should stick with our time.
Okay. All right. No. Oh, 10:30, yes, okay. Sorry,
It's just
It's a great time for it.
nothing but numbers.
yeah, I saw 10:45. We'll break then?
Okay, so let's have a break. Fifteen minutes.
This court will recess until 10:45. This court is now resumed. You may be seated.
Mr. Hutchings, we're gonna continue on looking at NCRR results and trying to reconcile, I guess, mining.
Yes.
So we're at slide 190.
Yes, if you could go to slide 190, looks at our net Crown resource revenues. So this is the revenues minus the costs for both of us allocated to RST in actual dollars, so nominal dollars. We have very similar results. I end up with 871,973, and Professors Bodway and Smart with 882,701. So there's a very small difference in this period where we have a similar method. Some of this relates to different treatment of mining overhead at sorry, the mines branch, for example. Next thing I wanted to talk about on mining, looking at the period after 1945, and then we take different methods, we end up, at least in present value day terms, at a very similar place. But I did want to highlight, when it comes to mining, one difference, or one thing I mentioned in my reply report about the inclusion of northern development roads as resource access roads.
So we're at slide 191.
Yes, slide 191. I'll just say a couple of words. As part of the changing ministry departments, relabeling of the departments, the moving around of functions, mines and northern development end up attached, if you will, for long periods of time after the war. Either the Department of Mining and Northern Development, Mines Energy and Northern Development, so on. And Professors Bodway and Smart and I both generally agree that Northern Development programs are excluded because they're focused on developing the North. But because of a difference in how the data are recorded in their transcription of the public accounts, for a 9-year period, Northern Development roads are classified instead as resource access roads, and so included in their analysis.
So I just want to stop for a moment and make sure I understood you. You identified that they take the public accounts and then they code them into a spreadsheet,
Yes,
and you reviewed that?
that's correct.
And now you're going to explain to us what you reviewed.
Yes, and I should say, I also code data into a different spreadsheet. I didn't undertake to go through every single line in their spreadsheet, nor did they in mine. We focused on the differences. And sometimes when I get to an example like this, it's because, the totals seemed stubbornly different, if you will. And so it's assigned to say, oh, I should go look. The prior example, the $12,000, given the number of allocation rules, to track that down would be a lot of effort. But when you see a period of time where it's different, I take that as a signal to I should go look, and see if there's something different going on. So that's how this example came to be.
Sort of you get twigged into it by what Professor Stiglitz called a smell test or something.
Yeah, or just, there's a change in the relationship and you want to say, oh, like we seem to estimate the same, then we don't, then we do again. What happened? Maybe I missed something, maybe they missed something. And so that's what leads me to an example like this, or I have a few more we'll talk about in a little bit. The fish example from earlier, Mr. Shackey.
Okay.
So if we look, this is a screenshot of Professor Beaudoin Smart's data. I'm now on slide 192. So this is just the one row that shows up. I've showed some values here from 1978 to 1981 for what in their data is recorded as resource access roads and resource development. And again, using the key there. So the 4 columns on the left, ministry, category, resource, exclusion, that's their kind of labeling and analysis, if you will. So it's in the Ministry of Northern Affairs. They've categorized it as mining roads. It's related to mining. Exclude is 0, which means it's fully included.
That's the ministry, not Beaudoin Smart.
No, the category and the resource, mine roads and mine,
Yes.
that's Beaudoin Smart.
Got it.
Similar to how I categorize things as like civil government overhead or
Okay.
those sorts of things. And it's recorded as resource access roads. Now, if we go to the next slide, this is a snapshot of the public accounts in 1980. I'm
Excuse
sorry.
me, let's back up, stay with 192.
Okay.
Just in terms of the values in 1978 and 1979, you got 1978, 6.2 million, 1979, 7.0 million, and then the very next year it jumps to 54 million and change.
That's right.
And you're going to explain that for us?
Yes.
Oh, okay.
Sorry. So, and I should also clarify all of those numbers and the numbers on this slide, we're now on 193. They are Ontario-wide numbers because these are from the Ontario public accounts.
But they're called Northern Road expenses.
Yes.
Okay.
Yes. So in the Ontario public accounts, this is the snapshot here on the right. This is for the fiscal year 1979 to March 31, 1980. So we have, we've seen some of these before, the statement of the Ministry of Northern Affairs, and I put in red the box Northern Roads. And the amount there, 54,311,358.
Mhm.
So that's how it's recorded in the public accounts. And in Professor Beaudoin Smart's data, it's recorded as a resource access road, 54,311,358. So that's how I can say what is one of these roads. Now on slide 194, I include, I should say a couple of things. First, Northern roads serve a lot of purposes, right? Unrelated to mining. I did talk about, 100 years ago, there were mining roads identified or within the last 100 years, but I think I showed an example when we were doing the early years of where I include mining roads. And Professors Beaudoin and Smart articulate a similar reason in their report. So this is from their nominal value report, paragraph 35. I include the quote. So we exclude expenses of resource departments that do not support resource rents. These include expenses on northern development programs.
So you didn't read it correctly.
Sorry. We exclude expenses of resource departments that do not support resource rents or the collection of revenues from rents.
I want to stop you right there.
Uh-huh.
They've used the word rents, not resources, and that's an area of disagreement between the two of you.
That's correct.
Are they using it in the same way?
They use the word, I think they use the word rents in the same way I use the word rents. But the setup of their test for relevant revenues is different than mine. They articulate relevant expenses as expenses related to the resources or the resource rents, not the resource revenues. So I think that perhaps explains the wording here of they exclude expenses that do not support resource rents for the collection of revenues from rents.
Sorry,
So
could
can
you
you keep
try
that?
that?
Oh, sorry.
Try that one more time. I'm not sure I heard it. They exclude.
So the statement, the quote from the report here is they exclude expenses that do not support resource rents or the collection of revenues from rents. which, to me, sounds like the test for relevant expenses has been set up as expenses that support resources or expenses that supports resource rents, not limited to expenses that support those revenues being the revenues, the direct revenues from the resources. This is a topic we have a bit of a back and forth in my reply report and their SIR reply.
But rents aren't restricted to resources. So when you say you see that Bodway and Smart exclude expenses that do not support resource rents or expenses that support resources or rent, are they using resources and rents interchangeably?
I think in this sentence, I think they're being used interchangeably, yes.
And isn't in the way you have used rent, it's much broader than resources. It could be all of those other, as you call them, laudable goals of the Crown.
Oh, sorry. No, that's not the distinction.
Okay,
That's right. Resources can generate rents. Other things besides resources can generate rents as well. There can be rents to human capital. The amount of the rent that is collected, either through an indirect tax or a direct tax, is a subset of those rents. But the rents themselves can end up benefiting other people. This is a little bit the Professor Mintz and Mr. O'Riordan point, I think, of indirect revenues and general prosperity. But actually, perhaps because this is maybe an indirect way, if I can make reference to my reply report, might be helpful.
Sure.
My solo reply, I will confess, I don't know the exhibit number.
Okay, well, we'll get to that in a moment. Your solo reply.
Yes,
possibly October 31st.
Exhibit 10, I believe.
exhibit 10, yeah. This one. I don't know. October 31st. Just my name on it? Yeah. Okay. And if we turn to paragraph 14 on page 8 of 88, this is where I'm quoting on how Professors Bodway and Smart set up their test for identifying relevant revenues and expenses. In the second full sentence, I say, they define, quote, resource-based expenses, close quote, to be expenses, quote, that are related to collecting, regulating, and supporting resource rents in the territories, close quote. I add the emphasis on rents. But this is, I think, the point of departure, or a point of departure on relevant revenue, relevant expenses. We have a similar definition of relevant revenues, but then when it comes to,
Wait, sorry, we have a.
so Professors Bodway and Smart and I
Yes.
apply a similar test for relevant revenues, quoting the same language from the judgment. When it comes to then looking at expenses that collect, regulate, support those revenues, in quote,
Those revenues are
Those
the
revenues
reference
to the judgment,
to the judgment.
I look at those revenues as being the direct Crown revenues I included. Their definition here uses rents instead of the revenues. And
Their definition in paragraph 14.
yeah, I'm quoting them.
Okay.
It's from their nominal values
Right.
reported, paragraph 30.
Exactly. And in footnote 19, I think I have the full quote.
Okay.
Footnotes 18 and 19, where they talk about resource-based expenses and then define resource-based expenses as those related to rents. So yeah, there is in the background, a bit of a different test being applied. on relevant expenses. And I think that's why in the language I quoted on Northern Roads, they're saying they don't include them because they don't support rents. I think that's a,
They're two separate issues bound
Yes.
up here,
yes,
right? One is their use of rents versus revenues.
that's right.
And the point that you were actually getting to on paragraph 194 had to do with something else.
That's great. Sorry, I've taken
But I
us on
did,
a bit of a
but
side.
when the word rents jumped out at me and I didn't want anyone to think that they were the same as revenues. At least not as Bodway and Smart used them.
Right, so that's why I took us to the reply report. Was that? helpful?
Yes, thank you.
Okay, good. Sorry.
So I took you off your point that you were trying to make about Northern Roads. I apologize.
No worries. If we can return to slide.
So back to
194.
slide 194.
So Professors Bodway and Smart elaborate that they exclude certain expenses that do not support rents or the collection of revenues from rents. These include expenses on northern development programs. They go on to say, while resource companies do derive some benefits from such expenditures, their objectives are far broader and they conservatively exclude them entirely. Okay.
And you would agree with that if you were agreeing on revenues, you would agree with this notion of expenses, that you should match expenses to the actual revenues, not some broader definition of benefits.
That's right. So I would agree on the matching under whether we're looking at rents or revenues. I agree on this narrow example of transportation infrastructure for northern roads. But more generally, I think this brings us back to the point from yesterday. Anytime we're doing a net calculation, the kind of balance between the benefits we're including and the expenses we're including. And so given the narrow, not narrow, given the focus on direct Crown resource revenues on the benefit side, that's the only benefit we're capturing of that list. Then the expenses should be those related to those revenues or those benefits. Like for any exercise, you have to measure the benefits and expenses in the same way to do any kind of meaningful cost benefit analysis. The concern I have, that is what I address in paragraph 14 of my reply report, is that we being myself and Professors Bodway and Smart share the same benefit focus, direct Crown resource revenues. But then when it comes to the expenses, they offer a definition that includes expenses related to rents, even though we're not capturing any of the benefits from rents that aren't subsumed in the narrow part of direct Crown resource revenues. So if we think about Professor Stiglitz's stack chart, we have the gold and then the sliver of red. We're both looking at the sliver of red on the revenue side, but given the definition they've put out, they're looking at the expenses that support the whole block of gold. And that's an imbalance. Does that make sense?
Mhm.
Okay.
Thank you, Mr. Hutchings. But again, you're trying to focus in on the Northern Road expenses at slides 194 and 195.
Right, sorry.
Again, I took you off that. That's my
No,
bad.
no,
I'm sorry.
No worries. Slide 195 is a screenshot from 1990 of the public accounts. So there's a period outside of the 9 years where I say there's an issue. And I'm just highlighting here, in this year, it's called transportation infrastructure under Northern Development. The number in the public accounts is $131,536,949. Professors Bodway and Smart record that same number and they exclude it. That's on the left-hand side there with the 1. Again, there's not a commentary given on every line item. I don't provide a commentary on every line item either, But this would seem to be consistent with the paragraph we just read, that northern development, general northern development infrastructure expenses should be included. It should be excluded. Sorry. Yeah. The live ed. Okay. Yeah, I think that this is a quote I included in my supply report, but it just goes to say that part of the funding for northern development, this is slide 196, was going to come from gasoline tax and other general revenue. So I think this is not just positive to why the roads are built, but it speaks to the Crown is thinking about a different basket of revenues and costs than direct Crown resource revenues. And I want to say, in principle, Professors Bodway and Smart and I agree on the treatment of northern development roads. I think there's just a few years where it's recorded where it's recorded as being included, even though it should be excluded for those few years that we looked at.
Sorry, where Bodway and Smart
Include the expense.
included the extent, so they deduct it from revenues
That's correct.
and you don't.
That's correct. Well, yeah. During this period, I don't look to the public accounts because of this problem of the mixing of expenses. But when I try to then reconcile our total numbers look okay, there was a jump. That's why I focused on these years that looked anomalous. Okay. The next resource is forestry.
So now we get to the big ticket item, I guess, forestry.
So slide 198 shows just the forestry revenues and expenses as Professors Bodway and Smart estimate them. A couple of things to note. This is Ontario-wide data. We generally agree on revenues. If anything, their revenues are slightly higher than mine, but not in a quantitatively significant way. The main area of focus is on expenses. And this is what Professor Stiglitz spoke about last week, that in every year from 1958 to today, there's been significant quote unquote losses from forestry as Professors Bodway and Smart have measured those potential gains or losses. And we're going to get into why I think this is an allocation issue. And so when measured more appropriately, there's significant gains from forestry.
Okay, that harkens back to the chart you told us earlier, the graph where if you add back in your interpretation of forestry revenues.
That's right. That's right.
Okay, so let's continue.
Right. So slide 199, I turn to my equation and I include a quote from my reply report. And I just want to expand on this a little bit. Professor Stiglitz last week spoke about two competing hypotheses for the losses. Right.
For the losses that Bodway and Smart
Exactly.
calculate.
So, you see that chart. There are maybe two hypotheses, knowing nothing, there may be two hypotheses you could form. One is that those losses are for some future benefit or for some other benefit in some other time period, that running up those losses has a rational purpose and, the payoff will come if we just wait.
Losses are investments, can we say
Yes,
that?
yeah, sure. The losses are investments
For future profits.
for future profits. Right? If I were to not know that was forest or anything, you show that chart to an economist. That might be one thing. Oh, you're in a period of losses, a rebuilding period, maybe if you like a sports analogy. Or, particularly over such a long period of time, and particularly when the gap isn't narrowing, there's another hypothesis that maybe the data has been mismeasured. And this is what I put forward in my reply report, that Professors Bodway and Smart focus on the investments, the maintaining of the resource, the regeneration, all those virtues. And I suggest that there's a simpler and more straightforward explanation, that because Professors Bodway and Smart ignore other Crown revenues and benefits associated with these expenses, it leads them to incorrectly allocate far too great a share of expenses to the small sliver of revenues included. I'm going to review now some materials published by the Crown about how the Crown talks about these many other benefits. And when you put it in that context, what looks like more than 60 or 70 years of losses, 60, I guess now, but the number is probably still running in the background, can instead be largely explained by too few revenues being counted against too many expenses. And this is our basic chart at the bottom. Those expenses are the cost on the right. They're funding everything on the left, but we're only counting the top little sliver on the left. And that will lead us to an inappropriate net calculation if there's an imbalance in the benefits and the expenses.
But you told us earlier, a few moments ago, about how you looked at expenses related to revenues and they looked at expenses related to rents.
Yes.
And you told us that rents includes much more than just the direct revenues. Might that also be an explanation for the difference?
Yes, and that would be consistent with what I said in that quote about you're including in too few revenues against too many expenses. So if we go back one slide on,
Is it either or? Too few expenses are measured against the expenses which are allocated to it, or too many expenses are matched against as you call it, the sliver of revenues.
yeah,
So just to say that the difference in opinion could be highlighted on either side of that equation.
I would agree with that. Now, if you imagine a little box, a 2x2 box with your,
This is how we do it in our.
oh, okay, we can do this. So you can, if we want to really simplify it, say there are two benefits, okay, two potential benefits.
Mhm.
Direct Crown revenues and rents in excess of direct Crown revenues. There are two expenses. Supporting direct Crown revenues, supporting rents above direct Crown revenues. You can include both on both sides, the matching one on each side. So the imbalance we have is they've included one of the benefits and both of the expenses. You could correct it either way. You could reduce the expenses and then you're comparing apples to apples, or you could include the other benefits and then you're comparing oranges to oranges. Does that make sense?
Yes, thank you.
Thanks. And I've ended up in some weird accounting system, but it worked. So,
In this courtroom, an abacus would help.
well, if the day comes that I need a whiteboard here, then we're really gone off the rails. Okay, so when it comes to what are those other benefits, I looked at, and I think we've read parts of this report together before. What are the benefits that Ontario identifies from the forest? Because when Ontario manages the forest and expends money to manage the forest, it doesn't expend that money, tied to revenues. We've already established that the expenses all serve all the objectives. So what are the objectives? So this is just a report from the Government of Ontario on the state of its natural resources. They provide economic, social, environmental benefits, biodiversity, etc. The next slide, slide 201 now, talks about sustainable forest management and how that's done and what are some of the benefits: healthy forests, ecological systems, diverse ecological systems. I don't know why I'm skipping the first word. Wildlife habitat, sustainable timber supply, jobs, recreational opportunities, cultural opportunities. So given these are the outputs of all the activities that Ontario is undertaking, there should be, if you wanted to measure, say, the net benefit of any of those outputs, you have to allocate the appropriate costs to each of those outputs. To allocate all the costs to only one is the same as saying you allocate none of the costs to the others. And logically, that's like our factories being in balance. So the next slide, I'm just going to focus in on something that can be measured. This is the buildup to a chart we've seen before. The forest sector gross domestic product. This is the GDP acronym I spoke about yesterday. Professor Stiglitz spoke about. And the way economists measure total output of something. Could be a country, could be the forest sector in Ontario. And Ontario tells us what are the subsectors. Now, why is this important? Statistics Canada tracks a lot of data on GDP. They track it by subsector, sector, but there's lots of choices you could make. The menu to order off of is very long, shall we say. And there could be some judgment applied about which ones to include, which ones not to include. The benefit here is Ontario is telling us when they do the calculation, these are the ones they include. So I take the same ones. Logically, they make sense. I should also say, if we were to include a couple of extra or subtract one of these, it wouldn't change the overall thrust of the analysis. But
So you're saying that these 4 bullet points on the right on slide 202 are the outputs.
the outputs that Ontario includes in their GDP calculation.
Okay,
So there may be other benefits, but these are the economically measurable ones, if you will. And so I take this. And using those data or using those subsectors from slide 202, I can go to Statistics Canada, get the data and plot slide 203, which was included in my reply report. And I think we've seen this before. These are the different subsectors on the side. Not on the side, they stack up. The 4 different subsectors that were on the side of the previous chart are what we use to plot this GDP data. And GDP, think of it as total economic output, if you will, of, in this case, paper manufacturing in Ontario, wood product manufacturing in Ontario, forestry and logging in Ontario, and support activities for forestry in Ontario. One of the benefits Ontario tells us it's pursuing as one of those outputs. And then included for reference are the orange line at the bottom. So the one that's always low is orange, is the direct Crown forestry revenues that Professors Bodman and Smart include. And we don't have a serious disagreement about the amount of revenues. But then the dotted red line above that are the forestry expenses that Professors Bodway and Smart include based on, in this time period, for example, some of those charts we looked at earlier, where I went through the 2005 and 2015 detail, the first snapshots that support, that natural resource management program we read about that does a whole bunch of things in Ontario.
so just to be clear,
Yes,
the red line are the expenses and the red line are expenses and the orange line is revenues.
yes, the direct Crown revenues. That's right. And the red is always above the orange. in this
As
time
measured by
period.
Bodway and Smart.
Yes.
Okay, well then I gave it to you incorrectly.
Oh, okay.
I just can't distinguish in the lines. I
As
can't
they're
just
chart- Yes, so
which one is orange and which one is red. But if I follow the order in the legend on the side, it says orange is revenues. And you
Yeah.
say that is the top line or the bottom line?
so as it's plotted on the chart,
Yes,
it's the bottom line.
aha.
I understand your confusion. On the legend, orange is above red. In the chart, red is above orange, if that's helpful.
So expenses are higher.
Yeah.
Got it. Thank you.
Okay, so I looked at this chart. Yes, we're now on slide 204. So what do we take from that chart about all those different benefits? Is that those expenses should probably be allocated more broadly than just to that sliver of revenues. Now, this chart on slide 204 It's also in my reply report. And this is where I look at data on average for Canada of how much GDP is collected by the government through, I'll say taxes, but I mean taxes with a small t, if you will, like it includes fees and so on and so forth. Does that make sense?
Mhm.
Okay. Yeah. So the Crown, or the different levels of government in Canada, would be expected to capture that green line on average. This is 33%. That's a Canada specific number from the OECD. And this is, the Canada specific implementation, I take, of the general numbers Professor Stiglitz talked about last week of 25 to 35%. So what am I doing on this chart? So we can just stay there for 1 second. The green line is an estimate of the Crown direct and indirect revenues from forestry. Still no quantification of prosperity, but even if we just stick with the indirect, and we see that that green line is a lot higher than the orange line on the bottom. So the portion of the benefits that either Professor Beaudoin-Smart or I are capturing in our direct Crown resource revenue analysis is small. Right? The orange is small relative to the green. But given the red expense line.
Sorry, and that's partly because you say you don't have great disagreement on the green line,
No, we don't have great disagreement on the orange line.
on the orange line. Right.
I think we have some disagreement on the green line.
Yes, sorry.
Yeah. No worries. But the big gap between orange and green would be the other general tax revenues, other indirect benefits the Crown receives, separate from stumpage, for example. So all I'm suggesting is the Crown, again, going back to those hypotheses, is the Crown an investor who thinks this will pay off, in the mid 22nd century?
When you say this will pay off,
The losses in forestry that we observe from 1960 to 2020, is this a very long run investment? Or is it a mismeasurement? This comes back and supports, to me, it's a mismeasurement because the benefits they're getting are actually quite positive. The timber is very valuable, not just to industry, but to the government. And the green line is an estimate of just how valuable it is to the government. And so if you look at this, spending that red line to capture the benefits of the green line makes sense. It seems like a good bargain. If you can spend 500 million to get 1.3 billion, looking in like the 2012 area, it seems pretty good. And certainly very different than spending, in 2012, 2013, I think you're spending 500 million to get 20 or 30 million in direct Crown resource revenues. That's a bad deal.
so,
Does that help?
Mhm.
Okay.
so I think perhaps we should turn to slide 205, because I think you're going to tell us how Beaudoin-Smart, how it breaks out in their analysis.
So slide 205, I'm replacing our head office factory example with, kind of expenses, and then what are the different benefits the Crown might get, right? So this is kind of turning my equation sideways. The costs are at the top. We know we're spending $633,621,000 in 2013 on forestry. Why are we spending that? What are the benefits the Crown is receiving? And, back to my 3 buckets, there's the direct Crown forestry revenues, which in this year, this is the bottom left teal box,
Mhm.
and in 2013 are $27,566,000. That's the number there's not really disagreement on.
That's the
left.
number that you add up each year's,
No, this is just in 2013.
this is just in 2013, okay.
The middle box is the difference between that green line on the last chart and the orange line. So this is, a kind of estimate of other crown revenues from the forest sector. This would be an estimate using that on average data.
And those included paper.
Yeah. Paper, manufacturing, wood product, manufacturing, forestry and logging, and support activities for forestry.
On slide 203.
Thank you.
So 205.
So going back to slide 205.
So this number is that, $1.3 billion number I spoke of. So this would be, for example, the indirect taxes on all those forest economy related businesses, or an estimate of those. Again, this is a bit of a top-down approach, right? We can say what happened in Ontario in all these sectors based on the work of the OECD. How might we think about that as an estimate of what the Crown is collecting from this forest economy, if you will? This is not building it up with the corporate or personal income tax returns of everyone who works in this industry, because those aren't publicly available for good reason. But it's a way of just painting the picture of why saying all of these expenses, $600 million, put them all offsetting the $27 million in direct crown forestry revenues, which is what happens in their analysis. This is the smell test Professor Stiglitz was talking about. You're spending $20, $30 for every dollar you collect for 60 years. Just doesn't make a whole lot of sense. And so again, is that a very long-term investment? Or, as I'm going to suggest, instead, should some of that 600 million be properly thought of as attributable to the middle bucket? So if we go to the next slide, I've set out, like, if these are our factories, there's a really big factory in the middle, and that should get a very large share of the forestry expenses. And so if we were to instead allocate that undifferentiated mass of expenses, $600 million, against the different benefits the Crown gets, you'd allocate the lion's share towards the largest benefit. And I should probably address the question mark in the room. On the bottom right, I have a green box with a question mark in it. That's other non-pecuniary, non-economic benefits. This is the prosperity, etc. That
The beauty of the trees.
yeah, sure, the recreational, cultural activities, etc. They have value. For purposes of illustrating this point, I don't need to put any value on them, because to the extent they have any value, the amount I would allocate to direct Crown forest revenues would go even lower. Right?
Can you remind me, what are included in direct Crown forest revenues if paper and manufactured wood products are not?
Direct Crown forest revenues?
Yes.
Yeah, that's basically just stumpage charges. Or area charges.
Okay.
Get in this year what they're called, but some version of stumpage charges.
In earlier years, there were ground rents and so
Oh,
on.
ground rents and bonus.
So that is a tree cut.
And again, I think part of the issue here is the way in which we've been measuring direct Crown forest revenues is just focused on the direct Crown forest revenues from that little sliver at the bottom from forestry and logging. That's how we include stumpage charges. This is just the magic, if that's where you want to focus, you're only going to count one benefit, then you need to restrict the costs.
And and the Crown revenue from paper, paper's manufactured in the private sector, by
Yes.
the private sector.
That's correct.
So the Crown revenue from paper comes from where?
Income taxes, sales
Okay.
taxes, excise taxes, those sorts of things. Probably not excise taxes.
It's taxes from those activities.
That's correct. They may also have some, business fees or something, but those would be
Right.
third or fourth order. The big one would be taxes.
And just to be clear, your your analysis of what's included in direct Crown resource-based revenues does not include taxes.
That's correct. I do not include income taxes or sales taxes. That's correct.
In the teal box
Mhm.
on slide 205.
That's right. There are no income taxes. Okay. So taking that allocation from 206, we continue the thought experiment. Slide 207 shows shadowed out in gray the old red line, if you will, all the forestry expenses.
I just want to pause for a moment. You said a thought experiment. What you just took us through was actual numbers, not a thought experiment. I mean, the actual number of 27 million on slide 206.
Mhm.
The figure of 27,566,017 for 2013 is an actual number.
That's correct.
And the 633,621 is an actual number.
That's correct. So what I meant by thought experiment of, if we now want to do the
Allocate.
allocation
Yeah.
and take the 2% and the 98%, which
So I just wanted to make sure
Oh,
we were
no, of
dealing
course,
with real
no.
numbers.
Absolutely.
Okay.
It'd be a very bad hypothetical if I invented numbers with that level of precision. On slide 207, the gray area, okay, the stacked gray area, that was where the old red line used to be. So basically the
Mhm.
total forestry expenses, and you can see in 2013, that'd be about 600 million. Now, what I'm saying is, if we take that and split it in that 2:98 ratio, and 2:98 was for 1 year, I do it year by year in proportion to the green line. Instead, the expenses to include are that little red bit at the bottom. See, it's quite small.
Mhm.
So that would be, if you wanted to follow that through, how that would look. And, that's, as I say, a kind of top-down approach. If you say, what is the total output, trying to capture all those benefits if we can, how would we then think about like including both items on both sides of the balance? Now, that's not the approach I took. I looked at the direct revenues. I didn't look at GDP. I didn't look at all the expenses that support all the benefits. I looked at just the sliver of benefits and then estimated that 32% is my estimate of the expenses of those benefits. So these are kind of two different ways of thinking of the problem that use different sets of data. You go to slide 208, there's a comparison of the blue line is the provincial expenses I kind of estimate. I do it all specific to RST, but if you wanted to take my method and apply it to Ontario-wide, I would say the Ontario-wide relevant forestry expenses are the blue line. And the dotted red line is when I adjust Professor Bodway and Smart's expense number, the one that was 500-600 million, based on that allocation I just talked about, using the estimate of tax revenue from GDP, I get the red line. Those two are pretty similar.
So let me see if I follow this. The red line are the expenses as you would have calculated them on the 32%.
No, so that's the blue line.
Okay,
The red line is taking Professor Bodway and Smart's. The red line is going through the little example we've just been going through of,
okay.
if I allocate only a portion of that 600 million to direct Crown resource revenues, with some estimate of what the indirect benefits are, I would get the red line.
Okay.
So, yeah, that make sense?
I think you need to explain this, at least for me, you do.
Sure.
The red line you said is adjusting for Bodway and Smart,
Yeah.
explain it a little bit better for me. Just
Okay.
try and explain it to me one more time because I'm at a loss.
Okay, so the red line is taking Professor Bodway and Smart's expense analysis,
Yes,
which generally supports, in my opinion, all of the forestry activity or nearly all of the forestry activity in Ontario. And then allocating only a portion of that to the direct crown resource revenues. Based
Only the 2%.
only the 2%. In some years, in other years, it's a higher number, based on the relative importance of direct crown resource revenues to an estimate of indirect crown revenues. So it all starts from a very inclusive view of taking all of the benefit, or most of the benefits, we exclude the non-pecuniary benefits, and all of the expenses, and then scaling down the expenses that are attributable to direct revenues in proportion to how important those direct revenues are to all of the benefits. So it's kind of starting with, the 2 on each side, and then trying to scale it down to 1 on each side. Okay, so we have an apples to apples of expenses that support direct revenues. That's the
Yes.
red line.
that's the red line. Okay.
The blue line,
Sorry, and that red line represents the very thin red sliver on the bottom of the graph on 207,
that's correct.
just blown up for us.
Yes.
Thank you.
And then the blue line is based on direct crown revenues in these years. And my estimate of the expense ratio of 32% from 1898 to 1945. So these are the numbers that are produced. You'll notice kind of 2 very different sets of input data into calculating each of these lines.
Coming at it from very different directions.
Yes, and I use this to illustrate just doing one small correction to try to account for indirect crown revenues in Professor Bodway and Smart's analysis generates results that are fairly consistent with my own, which I take as a sign of reliability that there is an adjustment that needs to happen. That the prior charts where we saw those big losses that Professor Stiglitz talked about,
Yes.
the 600 million allocated to the 27, there's kind of a economic gut reaction to that it doesn't make a lot of sense, but there's no telling that that's going to lead to a similar result as what I did. I hadn't seen their numbers when I come up with my own numbers. Looking then at trying to make it apples to apples and doing this adjustment for what we might expect the crown or government generally to be collecting from the forest and allocating that way. And that $1 billion number suddenly puts 600 million in contrast, right? If you think you're getting a $1 billion benefit, eminently logical to spend 600 million, right? And again, I think Professor Stiglitz said, we assume the crown is rational all the time. I mean, there's no suggestion that the crown is acting irrationally. So, based on slide 206, the crown is acting perfectly rationally. It's spending 600 million for a benefit of over 1.3 billion. I mean, it may not pocket that, and in this case, it probably would get that and use that to invest in public goods. The problem becomes when you see that contrast of just the first 2 blocks, it looks like it doesn't make any sense why you'd spend that 600 million. But we know the answer has to be these other indirect measures. This is what, again, Professor Mintz and Mr. O'Riordan said. If you only measure that very narrow first box, you're going to get negative results because of the tax revenues and the other prosperity benefits that the crown thinks about. So
Let's
you
go.
have to include all of those in any meaningful discussion of the crown's behavior.
Okay, let's go back to slide 208. So the blue line is your 32%, and it tracks kind of the red line that you've plotted. what does this, the fact that they kind of track each other, tell you about either confidence level or reliability of your using 32% as an expense ratio?
Well, it certainly makes me think it's a very reliable measure, because I'm comparing it now against a very different way of approaching the problem, starting at a kind of macro level, taking the expected tax revenues, using that to apportion, this undifferentiated mass of expenses to direct and indirect benefits. And the fact, the dotted red line comes out near the same place, in some cases, lower, makes me think it's very reliable. This was what I mentioned earlier when you asked, did I have any indication? I only buried the lead until now.
So that brings us to, I think, the last slide in this series, at slide 209, and perhaps you could explain what's going on here with
Yeah,
more colors.
So on slide 209, we add, this is the same chart as the prior slide, but I add onto it the included forestry revenues. So what is that? That's our estimate of direct Crown resource revenues from forestry. Just to give a sense of, if you've tried, basically this whole exercise has been reducing the one benefit versus two costs down to matching. And if we do it here, then you see, oh, look, the blue line is my estimate of direct expenses. The red line is Professor Bodway's and Smart's, adjusted for the fact that they fund a lot of indirect benefits. And then both of those relative to the direct benefits, the orange line, look sensible. There are periods of profit, if you will, or net positive revenues when the orange is above the others. And that can be very large in some years, small in other years. But it returns to the idea that the timber is valuable. The Crown has figured out a way, after 170 years, of managing it in a way to capture that value for the citizenry. And there are not huge and growing losses with no, again, this is the two hypotheses. Either there was a mismeasurement, and this would, I think, strongly support the mismeasurement hypotheses, or there's the other hypotheses that Professor Stiglitz spoke about, which is that, no, the forests are really worth nothing, and the government should pay someone a large amount of money to take the forests off of the Crown's hands. In all of Ontario, by the way, not just in RST. The Ontario-wide analysis is that the provincial government should pay a private person to take the forests.
I'm afraid you're going to have to just clarify a couple things on slide
Sure.
209 for me. You said the highest line, the one that breaks the $180 million mark.
Yes,
I call that one orange. It looks orange to me.
I agree.
Orange, or that one it says included forestry revenues.
Yes,
Is that only direct revenues?
yes, that's direct Crown forestry revenues. Excuse me.
And that's from their data.
Yes, I plotted their data, but we don't have a serious disagreement on the revenue numbers.
And then the blue and the red line are the expense items. The expenses allocated to those revenues, right?
Yeah, the blue is what I like, sorry.
Oh. Sorry.
Hold it on so I don't become an internet meme wasting water all over myself.
There's a cost to that.
Sorry, Mr. Schachter. Yes, so the orange line is direct Crown resource revenues from forestry. I plotted these particular data from Professor Beaudoin Smart's data set, but there's no serious disagreement on the measurement of direct Crown resource revenues.
Yes. And then the red line and the blue line, just once again, the red line, let's start with the red line, which is the one that starts at about 20 million. That's Beaudoin Smart's forestry expenses allocated to included revenues, but as adjusted by you, or explain
Yes,
that.
so that's the going through the allocation exercise we described of the 2%, 98% in 2013. So if I take their forestry expenses and allocate them to included revenues in proportion to the ratio of included and estimated indirect revenues, I get the red line.
And then
in-
the-
sorry, and included is another word for relevant? Or
Yes,
ha-
that's right.
you have used it as
I've used
relevant?
it that way. Sorry.
Thank you.
And the blue line is what you actually did, your implied provincial-wide expense amount.
That's correct.
And this whole estimate is done province-wide
That's
as an
correct.
example of the ratios.
That's correct. And really to illustrate the point that cost allocation in forestry is a major issue, in my opinion.
We've reached a good time to break. It's 10 to 12. It's a little bit early. Would the court want to come back at 1:15 or just take an extra 10 minutes and come back at 1:30?
How does that do with you? How does that work with what you're?
Well, we still have a fair bit to cover. I'm not sure that I think if, I'm okay with whatever works for the court clerk and the court.
1:30, 1:30, 1:30.
1:30.
Just before we break, I have I hope not a heretic question. All of these numbers, the purpose of giving us these numbers is to illustrate various approaches, theories, and principles. Is that right?
That's right.
So what you want us to get out of this are the principles, or the theories, the methods.
Yes, certainly. Whenever I'm contrasting our approaches, I'm using that to illustrate what I see as a virtue of the methods I've used or a potential problem with the methods that Professors Beaudoin and Smart have used. The summary numbers, like the 1.044 billion, is, I think, in my opinion, the most reliable number that's applying all of the methods and assumptions I used. But I want to, wherever possible, highlight the differences.
I asked the question, it's possibly somewhat like asking the question, what do I need to know for the exam? Right, so what I understand, or what I believe you're trying to help the court understand is that through your illustrations is why a particular set of principles or methods or approaches is more reliable.
And also that the number he ends up with is a reliable number.
Therefore, the number would be reliable.
If we take the last few examples, that's exactly what I'm trying to do. Is that helpful?
Yes.
If something else would be helpful, let me know and I'll do my best.
All right. We're going to have a break until what time? Until 1:30?
1:30.
Thank you very much.
This court will recess until 1:30. Thank you.